Welcome to both of you. Ron, I'll begin with you.
Hey, Tyler.
The possibility of a recession, rising interest rates, and spottiness in earnings doesn't sound like a recipe for putting all your chips into the market at this point.
Yeah, and I think, Tyler, it's, the policy risks, whether here or in China or in other parts of the world, Europe and the UK, are, I think, still ever present. And so the forecast for 2023 is cloudy with a chance of meatheads. Somebody's going to make a mistake and keep us on our toes for probably the first 6 months of next year, because inflation, all the data that we saw this morning is still coming down, but the Fed is insistent on raising rates. We've had 5 months of positive inflation moves directionally. And as you saw this morning, that PCE deflator was also actually softer than had been anticipated. So I think it's going to be, I think it's still going to be rough for several months going forward.
Megan, I don't know whether you would categorize it going to be rough for several months going forward, but you do say it's too early to lean into equities. But if you're going to lean just a little bit, you say focus on quality. What does quality mean?
Yeah, Tyler, thanks for having me. And I do think that while it might be too late to sell, I think it's also too late to really be aggressive and buy into this. I think the next couple of weeks or even months could be a little bit choppy. So, don't necessarily add to equity exposure, but we're looking to upgrade our equity exposure. And it's really interesting because we like quality. So what is quality? It's high profitability, it's earnings stability, it's low leverage. Interestingly, what has really worked this year has been value. And if you look at the correlation between quality and profitability and value, it tends to be negatively correlated. So we think we're going to see a bit of a rotation into the start of the year and seeing more flows and more outperformance of that higher quality, higher profitability, which also tends to be more correlated with technology and growth stocks.
Ron, this may be neither here nor there, but it's everywhere. What are your thoughts about the Fed pivot here? How is this all going to play out?
I don't know, Kelly. They're telling us it's not going to happen, right? I mean,
Right.
They're telling us not only are they going to raise rates 3 more times, but they're going to hold rates throughout 2023 at somewhere around 5% as far as Fed funds are concerned. And that, I guess, irrespective of whether or not we make progress on inflation, they're going to view that as transitory and keep rates high. And I know David Tepper talked about this yesterday on Squawk Box. As much as David believes the Fed and others believe the Fed, they will at some juncture be forced to pivot. There's almost no reason for us to have a recession.
What's going to force them, Ron? What would force them?
Well, I think if the recession gets too deep. I mean, a couple of the areas where their policy is absolutely irrelevant is in the labor market, because we're short people, period and end of story. And in the housing market, we're still short supply. And so they've already created a recession in housing. Leading economic indicators, something Liz Ann Saunders brought up today on Twitter, been down 9 months in a row. We've never not had a recession when we've seen that. So I think if the pain gets deep enough, they'll be forced to change. And again, right now, inflation is running in the direction that they want, and it's annualizing at about 2.3%. So that's core PCE, by the way, which is what they look at most closely. So,
but how?
Look,
if you hold that view, Ron, how can you possibly think the stock market's going to do anything but basically head lower from here?
Oh, I think it's the risk is sideways to lower, which is my view is, just camp out in 6-month T-bills until you get the opportunity to back up the truck, whether that's 3,000 or 3,300 on the S&P. That's where I would agree with David Tepper. Listen, he's managing 20 or 30 billion or $40 billion more than I am. But intellectually, I think we're on the same page in that regard. I don't see a bull market, a cyclical or secular bull market starting until the Fed pivots or until you and Kelly Hartung show up at a Jets game on TV again. I think that would be another opportunity to take note.